China's crude demand hit a record of 16 million barrels a day in March and will account for 60% of all oil demand growth this year. This is a remarkable feat for the world's largest oil importer, which saw its oil consumption slump by 5.4% in 2021 due to the COVID-19 pandemic and the government's crackdown on the refining sector. What is driving China's oil demand recovery, and what are the implications for the global oil market and the environment? In this video, we will explore these questions and more. One of the main factors behind China's oil demand rebound is its strong economic growth, which exceeded 8% in 2021 and is expected to remain above 5% in 2022. China's industrial activity, especially in sectors such as steel, cement, and chemicals, has been booming, boosting the demand for diesel and fuel oil. China's car sales have also recovered from the pandemic slump, increasing the demand for gasoline. Moreover, China's aviation sector has been one of the fastest to recover from the COVID-19 crisis, thanks to its effective containment measures and domestic travel stimulus. Another factor that has supported China's oil demand is its strategic stockpiling of crude oil. China has been taking advantage of low oil prices to fill up its strategic petroleum reserves, SPR, and commercial storage tanks. According to some estimates, China added about 200 million barrels of crude oil to its inventories in 2021, equivalent to about 550,000 barrels per day. China's SPR capacity is expected to reach 550 million barrels by the end of 2022, which means that China will continue to buy large volumes of crude oil to fill up its reserves. However, China's oil demand growth is not without challenges and uncertainties. One of the main challenges is the environmental impact of China's oil consumption. China is the world's largest emitter of greenhouse gases, and its oil use accounts for about 20% of its total carbon emissions. China has pledged to peak its carbon emissions by 2030 and achieve carbon neutrality by 2060, which will require a significant shift away from fossil fuels towards cleaner energy sources. China has already taken some steps to reduce its oil dependence, such as promoting electric vehicles, expanding public transport, and improving fuel efficiency standards. However, these measures will take time to have a noticeable impact on China's oil demand. Another challenge that China faces is the security and diversity of its oil supply. China relies on imports for about 75% of its crude oil needs, which exposes it to geopolitical risks and price volatility. China imports most of its crude oil from the Middle East, Africa, and Russia, but it has also been diversifying its sources by increasing its purchases from countries such as Brazil, Norway, and Canada. China has also been investing in overseas oil production projects and expanding its pipeline network with neighboring countries to enhance its energy security. In conclusion, China's crude demand hit a record high in March and will be the main driver of global oil demand growth this year. This reflects China's robust economic recovery, its strategic stockpiling of crude oil, and its growing transportation needs. However, China also faces challenges such as reducing its carbon emissions, ensuring its energy security, and diversifying its oil supply sources. How China manages these challenges will have significant implications for the world's oil market and the environment.